equipment financing secrets that the banks don't want you to know. Trust me, there's plenty of them. And we're going to get into them. We're going to get into the nitty gritty. What's interesting is all of this stuff could be considered like clickbait or headlines. And I think that's what Ryan and I really tried to do when we put together the presentation with our marketing team, is clear the air on some of that stuff, is really align on what you can expect when you do peel back the onion a bit on equipment financing, right? So we'll get this thing going for you. Oh, did I just move it around? I think I might have just moved it. Whatever, it's only the one slide. Hang on, I think we're good. Don't worry. Hang tight, guys. Yeah, there we go. We're all good. Don't worry about it. Don't worry about it. All right. So I am the master of rolling with punches, aka the VP of Business Development here at ROK Financial, Tony Cimino, and my whole job is to create lead generation for our business. So we are a commercial loan broker, and if we're going to work on business, we got to be in front of small business owners. You guys are how we do that. You guys are our affiliates, our partners. So we're excited to be on with you. Ryan, go ahead. Tell everybody who you are, what you do.
Yep, as Tony mentioned, I'm Ryan.
Get nice and close. Don't be.
Oh, sorry.
Yeah.
I'm not used to this format, you know.
No, we got a new little setup here. It's been a while since Ryan's been on, so welcome back.
I'm happy to be back. So as Tony mentioned, I'm Ryan Vahey. I oversee our commercial finance department. I work with the clients and also our team on the back end to work with our lenders to get the most diverse funding options for the clients available, whether that be through equipment options, SBA options, real estate-based options, and so on.
Yeah, so I don't know how many of you guys, how many of you guys have been following us for a while, or have been around for a while. Some of you guys might have even worked with Ryan when he was in the business development department, when he was managing some of our referral relationships. But Ryan's done a really great job for us, working his way through the ranks. And as he mentioned, he runs our commercial finance division. I don't like to draw a line in the sand and kind of define what that means, but I think it's important that you guys know the business that we come from, or where we do the bulk of our business, is actually in unsecured lending. So things like term loans, lines of credit, revenue-based financing. Those are the products that we're most known for, where you guys have probably seen the most business or done the most business with us. 2-3 years now we've officially had this division? 3 years?
Yeah, just about.
Yeah, just about 3 years now we've had a commercial finance division, where basically we took a look at ABL, we took a look at equipment finance, we took a look at factoring and accounts receivable. These were all relationships that we'd had one-offs here and there in the past, but we never had like a true division for it. We never had a true process for it. So Ryan's been in that department for years. He originally was doing some sales for it. Now, like he mentioned, he's more on the back end, and he's a resource for everybody, which is why I wanted him to be on this webinar today, because he's been that resource for us internal. So this is letting you guys get access to exactly who, when you call in and you're like, hey, I got this customer, I'm going to go, hey, Ryan, you mind jumping on this conversation real quick? So he's here. He's jumping on the conversation. That's what we're doing. And we're excited to be here. We're excited to dive in. But before we get into equipment financing, I want to outline that we are more than just any one product. We are ROK Financial. No, I'm just kidding. We are the best thing out there in terms of commercial finance if you have a network of business owners. If you are somebody that has businesses that may even be asking you if you are able to help them gain access to funding, right? We are the best resource for you. Why? Because we were built for you, if I'm being honest, right? So we have a ton of relationships inside of all of these products with different banks and lenders that allow you to reach into these products, into the fintech alternative finance industry, and offer all of these solutions as an extension of your own. We can go into these, but you're going to have to check out a different webinar. Quick little rundown, right? And I promise I'm going to let Ryan talk when we get to the equipment thing. I probably won't let him talk too much, but I will let him talk when we get to the equipment thing. I thought it was really important that we broke down who we are and what we do. For those of you that might be new or never heard me get a chance to speak about it, or maybe you haven't seen one of our hundreds of other webinars. But no, it's really all about you guys, if I'm being honest, right? When we built our business, it was all about helping small business owners. We've been in the industry for about 20 years now. And in doing so, we've tried every format of generating business for ourselves. you name it, from digital marketing to paid, YouTube or Google searches, to all sorts of different direct mail campaigns or other marketing, event marketing. I mean, we've tried everything. But COVID changed our business, and when COVID hit, or when COVID hit, and when it really kind of pivoted for us, was when we really weren't able to do much marketing, because those marketing resources weren't delivering the way they once did, right? I'll give you a prime example is direct mail. I don't know if you guys remember mail during COVID, but like it was delayed weeks or months. And even when it got to the business, what we found happened was those businesses were closed. Nobody was there to get the mail, right? So how do you market to those people? We had to find you guys, right? And that's what happened was we pivoted our business. 100% of our business comes through some form of affiliate partnership. So it's all about you guys, all the resources, all the learning, all the technology, all the trainings. It's all for you guys. So I definitely want you guys to make sure you're aware of it and can take advantage of it more than anything, right? We always get this question like, how do I be a successful partner? How do I do the most? What makes a successful partner? I got one word for you. You got to be a hustler. You gotta be willing to do more than the rest. And for most of the time, you got to be willing to do more than the rest for less at the beginning. And what I mean by that is we're not going to get it right the first time. I mean, I couldn't tell you how many times that's happened, right? Somebody refers over a business to us and we're not able to help, right? For whatever reason, maybe they don't meet our minimum qualifications, or maybe their use of funds isn't something that we can support, right? But those are learning opportunities. And if we learn together, I promise you we can hustle together, because that's exactly what we do. We're here to help you. We're here to help your customers understand commercial financing. How do they structure the financing within the capital stack within their business? And we're here to back you up and back up all of the relationships that you have with your customers. So that's us in a nutshell. What it means to access ROK Financial is you can be a part of over $3 million that's been paid to affiliates so far this year. I see all of these statistics, all of these social media influencers, all of these content creators. Oh, I've lent $5 million to business. I've been responsible for $10 million. Just so you know, each year, this is a true fact, each year, our referral partners, our affiliates, will be responsible for over $300 million lent to small businesses throughout the United States. Just so you know, that's new business. That's not businesses that we've worked with in the past. That is strictly new business referrals. So shout out to you guys for that. That's not us. That's you guys. And realistically, you have access to everything that you need, from a team that can help you out, to tech that's going to give you all the insights and cutting edge advantages, to having a process built out for yourself, as well as all of the marketing and sales support you could ever imagine. I mean, it's truly a business in a box. Put us to the challenge and let us know what you need, and we would certainly be willing to do it for you. Quick statistic, and jump in here, Ryan, because this is now your world, man. This is such an astonishing number. The equipment finance industry is over $1.3 trillion dollars, right? Well, $1 trillion for our fans of all of Austin Powers movies. 1.3 trillion. The one thing that I know about a trillion is there's 12 zeros. That's pretty much all I know about it.
Yeah, no, it's incredible. And when you think about the amount of businesses that are purchasing equipment, whether that be established businesses in the space or startups, it's growing year over year. So this is a stat from last year. I can only imagine what it's going to turn into this year in 2025.
Oh, absolutely. I mean, especially just the way the economy has shifted, right? Like I know we're not supposed to be political. We're not supposed to get into these things, but I don't know if you remember, but we just changed presidents. Okay. That affects our business, whether you like it or not. Right. So what I want you guys to understand is, as like for example, I just did a meeting the other day. This was literally somebody that I was talking to, one of our equipment lenders. They do larger transactions, but they were doing $100 million piece of equipment for the city of Austin. Okay. And it was a cooling unit for their data center that they were building that was going to be something like $7 or $8 billion of an investment.
It's incredible.
Right? So the cooling equipment alone was $100 million deal, right? So I'm telling you, there's big deals, there's small deals, there's big equipment, there's small equipment. And we can really service a pretty wide need of it. So I'm excited to get into some stuff here for you guys. I see a question, farm equipment included. Top answer here in equipment categories is agricultural equipment. But Ryan, jump in here, man. Like, what's on the screen? Go into some of the specifics. Like, how do we help?
Yeah, you say farm equipment. I love seeing agricultural. It's a great type of industry that's able to not only get equipment financing options, but also if they're unqualifiable for those types of deals, there's plenty of other financing options for them, like a line of credit, term loan, and a lot will factor into SBA and USDA loans as well.
Absolutely.
So all of these businesses really on the screen have those options available to them. A lot of these could be true startups as well. When you talk about transportation, that's going to be more of a difficult industry to help in that startup stage, as a lot of those businesses will typically fail if they're going to within the first 2 or 3 years.
Ryan, don't jump too far ahead, dude. You're giving away some secrets already, bro. You're giving away secrets.
I get into the details. That's why you got to shut me up at some point.
No, here's the deal, guys. Here's the deal. Every business is using equipment. I was giving the example before that when we pivoted, during COVID, we ended up having to buy some new equipment for ROK. We bought, I think it was 75 Google Chrome boxes at that time. Chrome box is a Google computer, right? They were $800 a piece. So if you bought 75 of them, that's $60,000 of investment. I don't know if you guys know anything about technology, but it hasn't really advanced over the last 5 years, right? Like, technology hasn't gone anywhere, right? No. There was AI 5 years ago. There was all these different resources, right? No, technology industry is ancient 5 years ago, right? So we are noticing now in our own business that we got to replace some of these things that, we're going to be either replacing them because of need, right? Because some of them are starting to break down and they're no longer doing what they need to do, or they are going to just need to be replaced because they're excuse me, now obsolete, right? So think of that. Think of businesses like every business, when they expand, they need more equipment. When they've been in business for a while, they got to update the old stuff. Like, equipment is not something that goes anywhere in a business. Like, it's a true necessity within a business, right? There are two categories, though, right? You have what do they refer to it? Small ticket and large ticket, or
middle ticket and large ticket.
Yeah. So break that down for us a little bit.
Yeah. So up to 250,000 is where we're going to need less document intensive. We're typically always going to need a ROK application, or not typically, we'll always need a ROK application, so we could look into the credit of the borrower. That's going to be a big thing in equipment financing, is that the approval is more focused on the personal credit of the business owner, also their business credit, rather than the revenue or the balances they hold in their bank statements to really justify the affordability. Now, when we do see applicants that have lower credit scores, sometimes those could be used as a compensating factor. So we found a lot of success in this smaller or mid-ticket bracket up to 250,000 to collect the bank statements on the upfront. That way we can immediately identify what programs the client's going to be able to qualify for, so we could present them with the best offer off the bat. A really cool part of our technology.
Can I jump in really quick?
Yeah, go ahead.
I'm all about like the real life examples, right? So we had a customer a few months ago that applied with us. They were a transportation company. They had, I believe it was 36, and they were going to 39 trucks and trailers on the road. And each of the trucks and trailers, I believe, was like 210 or 215 grand. So combined, it was like a $700,000 invoice, right? We couldn't find anybody that would do all three trucks on one invoice. But what we were able to do was take one truck and go to one lender, one truck and go to another bank, and one truck and go to another bank. And we were able to get them the funding using the simpler process, or the low ticket equipment financing process, to go get what would have been really a high ticket example. So I just don't want you guys to think that like, oh man, just because somebody needs 500 grand in equipment, that's going to make it extremely tough. No, a lot of times when you need 500 grand in equipment, it's not just one piece, right? So we can kind of put it together by being able to say, okay, well, we can do a little bit over here, a little bit over here, a little bit over here, especially for those businesses that do have a need for expensive equipment.
Yep, and now in that situation, if you were purchasing that 500K piece that could only be financed over one note, it's just going to require a little bit more documentation. They're not going to be just solely focused on the credit and bank statements like the smaller tickets would. They're going to look into the business's financials, tax returns to see if there's the affordability there to be able to pay that loan. So like Tony mentioned, a lot of times when we'll receive invoices with multiple pieces of equipment or sometimes even multiple different invoices from different vendors, we'll use different programs to be able to get them the full dollar amount needed.
Absolutely. And that's the by any means, right? Like, at the end of the day, it's really all about being able to qualify for what you need when you need it, right? And it doesn't really matter how that happens, if I'm being honest, right? You gave the example before of somebody that, might not qualify for equipment, but being able to go and take cash to go and get a piece of equipment, right? We just had a banker, a commercial ag banker out of Nebraska, I think, or I'm pretty sure it was Nebraska. I want to say Oklahoma, but I'm pretty sure it was Nebraska. Shout out to the Cornhuskers, right? But they were a commercial ag banker that had a customer that needed some new equipment, but also needed access to capital. So they referred that business to us after declining the customer at their local bank. And then we were able to go get that same customer a $150,000 line of credit that they used to purchase the equipment and also ramp up their employment or their staff for harvest season. So it's all about the business. It's all about why they're using the money, and then being able to give them the access to the types of capital that could actually service that need. Yes, we're talking equipment specific today, but just understand that it's all about why they're borrowing the money, and that'll dictate how they should go about getting access to it. So we got a few secrets we're going to share with you guys today. A few secrets. Startups. Absolutely, right? You hear me on any other webinar, I am telling you startups scram or startups, that's a trick question, right? It's still a trick question because at the end of the day, you could be a startup and go on Shark Tank with $10 million a year in revenue and been around for 25 years. Yep. But I'm talking true startup. I'm talking somebody that has not made any revenue into a business account just yet. That is somebody that can qualify for equipment financing. New or used equipment. Right? A lot of times people think it has to be new equipment, right? So it can be used equipment as well, right? The other thing is people think like, it's got to be like an asset-based loan, right? So it's got to move slow, right? Equipment's an asset in the business, so it's got to work like ABL. You got to do title, and you got to do this, and you got to do that. Like, nope, not the same. It is not the same. It's more like, if I'm being honest, if I could compare equipment financing to anything, it's more like buying a car. Right? Yeah. Like it's not the same. So we're going to go into these things a little bit more, right? Startup equipment financing, right? Because again, I told you, it's not just about the headlines. The headline is that you can actually qualify for business capital as a startup business, right? There's your clickbait. There's the one that you can use. But here's the reality of the situation. It does take more to qualify. Meaning that you have to be a stronger borrower. You have to have industry experience, right? You can't just be this individual who thinks that they're going to go start a manufacturing company, and because you have a really great idea, somebody's going to give you the money to do so. That's not how it works, right? You have to be able to prove that it's something that you can actually do, right? So just keep that in mind when you're talking about or talking to a potential borrower in regards to equipment financing or in regards to just being a startup business owner, that, hey, yes, you can go get access to it, right? There's limits though, right? Like, how much money can a startup get access to?
Startup could get access up to 150K. I think that the big thing to point out here on this slide is we say 700 plus credit, but we're looking really for that strong comparable debt. So what the underwriters are looking for is they're looking for the borrower to have taken out or have similar debt amounts in the past that they've showed the ability to pay back on. Since it's a true startup and we don't have any bank statements, any financials, any proof of concept from this business owner, we're really going to be solely focused on the personal credit. And that's exactly what they look for, is they look for amounts in that credit that are comparable, usually 60 to 70% comparable to the request, to really be able to have that something that's approvable.
Yeah, and just so you guys know, there are some restrictions in this. There's the restrictions in we can't really help the transportation or trucking industry at the moment for startup financing.
I was giving that one away before.
Yeah, that was the secret I didn't want them to give away, in case you guys were wondering. No, so there are some no's. Thank you, Kim, for pointing that out. There are some no's, right? No cannabis, CBD, hemp, or any other vice industries. No med spas or like estheticians or any of those like newer types of businesses like that. It's really tough when you're talking about like computers, security equipment, or even POS systems. But if you come across a construction, somebody that's been in construction for 10 years, now they're going out on their own, they need an excavator or a backhoe or a forklift, whatever it is, we're here to help. If you have a doctor who's going out on their own, they're starting their practice, great, let's do the whole office. I want all the equipment as you walk in. I'm going to do the waiting room. I'm going to do the desks, the chairs, all of the equipment when you get into the actual room that you're in, right? So from think X-ray machines and lasers and all sorts of resources. Obviously, I'm no doctor because I don't even really know. But
I think you hit it right on the head, though.
I think we get it. It's one of those things where startups are risky. So if you start to pile on more risk on top of being a startup, it's probably a no. If you are somebody that the most negative thing about you is it's that you're a startup, well, then we have somebody that you're talking about could be a candidate for this, right? So all good if you want to run through some scenarios with us. We recently did a restaurant here on Long Island as a startup. However, right, and I know when I was discussing this slide with Ryan at first, he didn't even really necessarily want to put all this information out there because, let's face it, startup creates a buzz. Startup creates an idea of, hey, I can go. For some reason, people think that because if you're a startup, right, you can go get access to free money that you'll never have to pay back, and it doesn't matter if you have bad credit or not. Like, that's not the case, right? If you are somebody, though, that you've kept your credit where it needs to be, you own a home, you've been a doctor for a while, it really can be a good resource for you. The chat's blowing up. They want to know, why no trucking? Well, let me ask you guys a question. Do you know that the most highly restricted industry in terms of banks lending money today is the trucking and transportation industry? That's a fact. I just got off the phone with a banker earlier today. They told me the same thing, right? This was a bank in Iowa, and I am nowhere near Iowa. So I'm telling you, it's affecting New York, it's affecting Iowa, it's affecting Florida, Texas, California, you name it. I will say this, though, about the transportation industry, is I do think it's hit the bottom. Meaning that I watched for the solid 18 months it do one of these. It looked like we were gonna have to shut off lending altogether to the transportation industry. But I think it's bottomed out. Meaning that we are starting to see signs, especially on the unsecured side of the business, where if you are in the transportation industry, you are making more than like $20,000 or $25,000 a month. We're starting to be able to really help those businesses out again. Equipment financing, no startup, because trucking and transportation is an extremely risky industry. So putting the most restrictive industry and also the highest risked borrower in terms of small business together, that's why it's a no. So I hope that provides some insight to you guys, Michael, Rod, James. I think there was a couple others that were asking about it. I hope that answers your question. And if you do have, William says, that makes no sense because the transportation industry is how things actually get done in this country and other countries. Listen, I'm not here to debate the fact that is one of the most necessary industries that we have. However, I will debate you on the fact that that's also one of the industries that's looking like it may phase out due to AI. Right? They already have trucks and trailers that will drive 500-600 miles without somebody behind the wheel. Right? So that's the biggest hurdle for the trucking and transportation industry right now, as well as the fact that there are massive businesses that have gotten into the transportation industry. I mean, just a couple years ago, when Amazon was really trying to ramp up Prime delivery and be able to get to you in an hour or 2 hours or same day, they started hiring all of these third-party logistics companies to come in. They've rolled back most of that program. I don't know if you've seen them, but there are a lot of new Amazon trucks on the road, and they're not the only ones that have done this. The big corporations are trying to eliminate the small trucking companies and the small trucking industry. I have no say in it. I have no say with how they treat it. I firmly believe what William just put in the chat is that it really is one of the backbones of our country. So I would look to support it myself if I could. So hopefully when I do run for governor, you guys I have your vote. But the reality is we're just here to deliver like the news, what the temperature is today, what it's going to be tomorrow, right? And like I said, it is doing one of these right now. It is on the rise, and we have seen some signs in terms of being able to help more of those businesses again. So it's not totally a shutdown thing, and I don't want to spend all day on trucking startups because, again, it's not something that we can even really help with. But again, I do want you guys to understand why that is the case, and why it is the way that it is. So I hope you guys can appreciate that. Here we go. There we go.
There with trucking, costs are high right now in the current economy too. So trucking companies that didn't have to pay this increased margin are now taking a hit in their profit margin, and lenders see that as well because in the past they've financed these transportation companies and they're having defaults.
Yep.
So that's really the reason that these underwriters have kind of turned off the transportation industry under 2 years. But again, once they've reached that 2-year mark, the rate of failure for that business goes down extremely, and a lot more banks, lenders are comfortable with those types of businesses. So those are absolutely an industry that we could help as long as they're a little bit more aged.
Yeah, absolutely. And even if they don't have 2 years in business, remember, they can go and get access to an AR line, a factoring program, a term loan, a line of credit, revenue-based funding. If they have a piece of commercial real estate, we can even refinance that for them. It's not every product. It's just equipment financing and leasing specifically. Secret number 2, new or used equipment. New or used equipment. When we sat down and we built this, you said something really interesting, and I wish I could quote it, because you were pointing out the fact that, like, you could literally go get, like, a lot of times, I remember buying, I know this is a bad example, but I remember buying textbooks in college, right? And it was always the same. They might move a picture from here to there, or they might update a graph to add the new year in, right? But it was really pretty much the same. Like, if you bought a skid steer or a backhoe from 2022, it's going to be pretty similar to the 2025 version, right?
Absolutely.
Except there's 2 factors that are much different. One is it's a fraction of the cost. But 2 is you're also not going to see that fall off in terms of the value of the equipment that you would, like when you buy a car and you drive it off that dealership, right? You drive it off that lot. All of a sudden, boom, there goes the depreciation of the vehicle. It's instantly worth, 2/3 of what you just had, right? Like, it's not that aggressive, but you guys get what I'm saying. When it comes to something that's brand new, the second it becomes used, now all of a sudden it does drop the depreciation by a good amount. So jump in.
Yeah, no, it's a great point to bring up used equipment, as a lot of smaller businesses, like we were talking about, startups specifically, they don't have the cash or the affordability to be able to pay these brand new prices. So it's always a great option to look into used equipment, as many of vendors are going to offer warranties. They're going to recertify the equipment. Sometimes in even trucking, you'll see that the engine is rebuilt, and they'll provide a
Yes.
certification of that to show that this 10-year-old truck still has new life with a rebuilt engine, and equipment lenders love that. Used equipment is also great, like Tony mentioned, just really cutting down on the depreciation that they're losing over time. They're able to get really the full use life or value out of the equipment, and if they want to go ahead and turn in 2 to 3 years and sell it back to another business or vendor, they're really not losing much in terms of capital, but they've gained the use of that equipment for the past 2, 3 years, which hopefully is going to help them expand their revenue and be
You
able
could
to make
almost,
more money.
yeah, you could almost argue that that's invaluable, right? Because you don't know what it could mean for that business or that business owner, or what type of business they might be able to pick up because they have that extra equipment or are able to do more jobs or take on more business, right? So I would almost argue that the opportunity to have the equipment becomes invaluable, right? And if you can be extremely smart and concise and really understand that, like, hey, I might be biting off more than I can chew if I go get this thing brand new. Plus, if I'm gonna look to upgrade it in 3 to 5 years, I'm gonna lose a good amount of money on that, right? Versus if I do the same thing that's only a couple years old, well, a lot of that stuff took place already. So it's really a great option for businesses that are looking for options, for those dealers or vendors that might have used equipment. The banking world, how do they view used equipment?
They definitely don't like it. They want to be able to utilize those new pieces of equipment really just for their valuation methods. They don't want to offer really not even a structured offer for used equipment that would be beneficial for the client, due to the valuation method that they use again. So for them, used equipment is usually going to be restricted, and they want those brand new pieces. Sometimes you'll be able to get like a newer piece done or squeezed through, but a lot of times when it's one of those newer pieces, it would be through a private party that the banks don't like as well. They want it to be sold by that manufacturer or that vendor.
Yeah, absolutely. I'm going to go out on a limb here. And Ryan has no idea that I'm about to do this, but I recall a deal decently recently. Maybe I'm shot, and this was actually much longer ago than I think, but we definitely worked on a transaction more recent than not, I feel, where it was actually a startup trucking company private party sale. Do you recall the transaction that I'm talking about?
I do.
Okay. Now, I want to walk you guys through that because I just told you we can't do startup equipment financing, but we got this deal done, correct?
That is correct.
So how did that happen?
So with trucking specifically, also like doctors, licensed practices, they'll be able to utilize in a trucking and transportation business's case the CDL for that borrower to show that they have that experience, and they'll give them that as time in business. So somebody that just opened their entity last week and is now applying for the financing of their truck to be able to go out on their own and has worked with a trucking company for the last 20 years, renting their truck or using some sort of arrangement with that company for the truck's access, and now they want to purchase this new piece of equipment, we would just want to request their CDL to show that they have that experience. A lot of other times we could use 1099, Schedule C as well.
So what you're telling me is I just argued with the chat, and and the reality is that there was a scenario recently where we did a startup trucking deal where it was also a private party sale. That's all a fact. And I want you guys to understand the reason that we were able to do this, and this is why it's so important to understand why somebody's borrowing the money, being able to have access to that person and understand the true story, was they were operating under somebody else's authority, right? They had a truck that they'd been driving for the last 5+ years that company wanted off of their books. So in order to continue driving for that company, they were making the drivers go out and buy the trucks from them to continue delivering loads on their behalf, right? That scenario right there, we were able to get a lender on the conversation that was able to handle the fact that there needed to be a conversation, and we were able to put a deal together. So what I want you guys to understand is lending is black and white, underwriting is black and white, but ROK Financial, we operate in the gray, right? So if you got a really cool story, we want to hear it. We want to hear it. We want to walk through it and see, is there a possibility? And not to use the trucking example, but we don't know what's under the hood until we pop that thing open. That was pretty good, right?
That was a good catch line.
I wish it moved to the next slide faster, because that would have been much smoother. I don't know why this keeps happening. There we go. Secret number 3 is it doesn't take as long as you think, right? We're not talking about weeks or months. In fact, it's hours and days. Right? Typically, we're seeing approvals within 12 to 24 hours, and the typical closing process is like 3 to 5 business days. What we've seen here is it can be faster than that with a highly motivated borrower. We also have some great relationships with equipment vendors directly that are selling things like software companies. There are people that sell construction equipment that utilize us. There are people that also have different types of equipment, meaning like they might sell small ticket stuff, they might sell bigger stuff. They have like a line of equipment that they're selling to doctors or dentists or this person or that person, right? And they've aligned with ROK. And in doing so, we've been able to streamline their processes even more. Right? So if you do have somebody that's a seller of equipment or reseller, or maybe you know of a local equipment vendor in your network, definitely reach out to them and find out what types of funding are they offering. You're going to hear things like, hey, we need 3 to 5 plus years in business. We're going to need profitability. We're going to need a certain debt service coverage ratio. We're going to need that borrower's firstborn's birth certificate. You know, we're going to need literally everything, right? That's not ROK. That's not how we operate. We're here to help those gain access to funding that might not be able to get it anywhere else, including those who need equipment pretty quickly.
Yeah, you know what? I've found that we've really been able to speed up this process by always taking over with the vendor as well. So even vendors that we don't have relationships with, any client that comes to us with a new vendor, we go ahead and reach out and make contact and start to develop a relationship with that vendor. As through the underwriting process, especially if it's titled equipment, we're going to need a lot of information from the vendor themselves, like title adjustments. Usually in transportation, there's going to be a GPS involved as well for the duration of the loan, so they'll want the GPS sent out to that vendor. So us coming in and taking over the communication with the vendor and not having that burden fall on the client's back, I've really found has helped us speed up the process and also helps us develop more vendor relationships. I always say that to referral partners, the best person you could have sending you business is going to be an equipment vendor, because they're not going to have the 1 or 2 deals a month. They're going to have usually 80% of the clients coming to them requesting financing. And if they don't have an outlet, or they only have 1 or 2 outlets, they're going to be extremely restricted in the products that they could offer.
Yeah, and especially for those that might be like major manufacturers or have major bank style relationships. You know, I think of like a John Deere Finance. You know, or one of those like Kubota offers financing, right? Like those are like getting money from your local bank. And 94% of businesses can't go to their local bank and get access to funding. So you're going to see a lot of declines. Like Ryan mentioned, most of the customers that are going to actually come across that person's desk are actually customers for us and not their in-house funding. So keep that in mind when you are interacting with those types of people within the industry. We did not include this one, but I think that this is one of the best kept secrets about equipment financing. And there's actually a typo here. It should say 100+% financing available, right? How is that even possible, right? Like, you buy a house, you got to put money down. You buy a car, you got to put money down. Like, what do you mean you can finance more than 100%? Tell me a little bit about that.
Yeah, so it's a great option, obviously, to be able to finance that full cost. But this is really building in multiple products together. We could get 100% of the equipment approved through a note. Really, the biggest factor that comes in there is going to be the valuation of that equipment and what it's being sold at. If it's being sold at the same price as the value, typically we could get 100% financing if the client qualifies based on their credit. Now, when the sale price is much further above the value, thank you. That's when there's typically going to be those larger down payments involved where you'll see 20 to 30%. So that's always great to keep in mind. And then the 100 plus that Tony mentioned is we could do equipment financing and also add on a line of credit. So if they're looking to purchase a piece of equipment and now market that to their customers and be able to really drive revenue with that piece of equipment, that's something that we could look into and get both of those deals done at the same time.
The other thing that we're able to finance is soft cost for equipment. Meaning, like, okay, here's a good example. We did a deal for a company that was a VR company that, like, literally it was one of those places where you go in and they were like a virtual reality, like, I don't want to call it an arcade, but like that's like kind of what it was. Yeah. It was like a gaming company. And in order to be able to even just operate the virtual reality system, number one, you had to set that thing up. And I think it was like a week or two process to do that. And then there was like another week or two process to train the staff on how to set up the VR, how to calibrate it, how to get it set up for the next person and recalibrate it, right? You think about that, right? You buy a piece of equipment. A lot of times when you get access to funding, those payments are going to start pretty quickly. We've seen deferred payments for 30, 60, 90 days. We've seen it where payments can actually fluctuate with seasonality depending on the types of business. And like I mentioned, we've also seen it where you can finance soft costs, things like shipping, things like the training and the team to come set up the equipment. All of that can be financed through the equipment financing. So always ask the question, because I learned a long time ago the only answer to an unasked question is no.
You know, a lot of times where we see that too will be with restaurants where they have to get those large walk-in freezers installed. Yep. And they actually have to go in and start to take down some walls, put up new sheetrock. Typically that could run $8,000-$10,000 just for the installation, another $80,000 for the walk-in fridge.
Yep, absolutely. The electrician to come run the wire to wire that thing up. Yep. No, absolutely. It all adds up. You literally took the words out of my mouth. I was literally saying that. So here's the deal. Here are some of the industries that we help most often when it comes to equipment financing. Above and beyond, yellow iron construction equipment is the what we see most of these deals getting done as. I don't know really why that's the case, if I'm being honest. It just seems to be maybe those are the relationships that we have. But I can tell you that everything from restaurant equipment to medical equipment to manufacturing to construction to auto repair. We're here to help with all of it. We can also do things like software. One of the other things, I don't know if we have a slide for it, or did we leave off the licensed equipment? Like software, right? So if you have a piece of software, or some sort of licensed agreement to offer a piece of software, let's call it 24, 36 months. What we're able to do sometimes with some of that stuff is even help you pay for those licenses over the life of your license through equipment financing or leasing. Yep. So it really is an extremely flexible product that you might not be aware of all the nuances or ins and outs of how to leverage it or take advantage of it. And I'm here to tell you that you don't need to know all that stuff. I can't tell you how much equipment financing I do, and I go, hey, Ryan, do me a favor. Can you answer this question? Right? Like, it's not what you know, it's who you know. And you guys got access to Ryan as well.
Yeah, and if I don't know the answers to your questions, I'll make sure that we're able to uncover them.
Yeah, absolutely.
Big thing to point out on this slide, too, is these different equipment categories break down into multiple different types of businesses as well, as Tony was diving into with healthcare before. There's several different types of healthcare type businesses, whether it be a med spa, a doctor's office, or a full range hospital that needs the equipment to be able to operate. We're able to help all those different types of businesses. Now, each business might see different programs available based on their credit and their revenue markers currently, but definitely good deals to bring in these spaces specifically. Another big one that we see is restaurants. I know that everybody loves their local restaurants and is always looking to help them out. A lot of caveats in that as well. As Tony mentioned, we've helped out a big startup restaurant, but key factor there was they already had 3 other restaurants established. So we were able to tie those in and get them the full 100% financing that they needed without even looking into business revenue or business factors.
Yeah, it was all based on the equipment and the fact that they've been in business as long as they have. They have a history of making it happen, right? So here's a couple quick success stories for you. As you can see, manufacturing, restaurants, they're obviously going to utilize these funds to upgrade or purchase new equipment. I can't tell you how many times it's come up recently, especially in the manufacturing industry, which has been exploding recently, if I'm being honest. But we've seen it time and time again where they're looking to add a new product line, right? You add a new product line, that's going to add X amount of dollars in revenue, but how are you going to get there? Well, I need these 5 pieces of equipment to do so. I need to be able to hire the employees to leverage that, to start to leverage that product line and get that product out. But what you see a lot of times is if you're going to go invest your cash into an opportunity like that as a business owner, you might not see any return on that investment for months, right? It might take you 30, 60, 90 days to get all the equipment up and running. Then it's going to take you 30 days to get the product out the door. Then guess what? Your customers don't even got to pay you for 30, 60, 90 days, right? So think about that, right? You could have spent money in 2024 that you're still waiting on a return on today. Or you can use what they call OPM, other people's money, and have a small monthly payment, get access to all the same stuff, and which we didn't even really go into today, with Section 179 of the tax code becoming permanent this year, you could actually write off all of that equipment this year against any of the profitability that you have in your business. So don't take my word for it. Go speak with your tax professional because, listen, the reality is there's many ways for you to take advantage of funding within your business, right? Couple quick do's and don'ts. We'll get this presentation wrapped up here. For those of you that aren't signed up, we'll get you guys signed up. For those of you that are signed up, keep rocking. If you guys have questions, I've noticed a bunch of questions that we haven't been able to answer in the chat. Please, please, please put those in the Q&A. We're going to do some rapid fire Q&A here in a second. Definitely make sure you do that. But really quick, definitely can't have extremely high utilization on your revolving credit lines. If you are actively in collections, it really doesn't make sense to apply. You cannot get equipment financing through an auction house. So definitely keep all of those things in mind. But however, if you do have under 50% utilization, you are somebody who's able to make all your payments on time. You are somebody that's working with a vendor, reseller, or seller of equipment. Those are all awesome ways for you to be able to access equipment financing. Don't take our word for it. Don't take our word for it. I promise you.
This is my favorite slide.
Yeah. Why? Because your name's on it? No, I'm just kidding. So is mine on this one. I don't know how they found one with me on it. Usually the ones with the bad reviews are mine. No, I'm just kidding. No bad reviews. We have thousands of 5-star reviews across the internet. There's, in this screenshot, 743 on Google. There's well over 1,000 on Trustpilot, Consumer Affairs, this one, that one, you name it. We have the reputation, and it's from you guys. It's from your customers, right? If you are somebody that's new and you want to become a ROK affiliate, you want access to everything we just talked about, here is a QR code on your screen to sign up to get going. We would love to have you. We would love to do some business together. Stop lingering in the back and let's get rocking. Definitely would be excited to work with you in the future. If you're just looking for some extra info, maybe you want to find out some more information, you can jump on our website. You can go over to the equipment financing page. You can send us an email. You can call us. We're here to help. We're here to have a conversation. We're real people doing real business with real business owners. So we would love to provide you guys with that information. Otherwise, we definitely want to make sure of 2 things before we go. Number 1, you got to make sure that you're joining us on our next webinar, but also October 16th and 17th. I don't know if you guys know it. We are hosting a Dealmakers Forum, meaning if you make deals, get in the office. Let's meet, let's shake hands, get in the office, talk to other partners, talk to people who do business with us, figure out what they're doing to be successful. But as I always say, man, let's rock, right? So if you can get here in person next month, we would love to meet you. Otherwise, we will catch you guys on the next webinar. And until then, keep rocking, everybody. Thanks so much. Have a great day.
Thanks, guys.